Okay, so our first video for June deals with the issue of what is consideration. Remember, you can't charge VAT unless there's a consideration, an amount for normal income tax purposes. Now, the question we got is, it's not a partnership, we're just in an agreement. And what the agreement says is we don't get a rental for certain property, but we do share in the profits ultimately derived by the activities conducted on that property. And is this a profit share? And if it's a profit share, is there VAT on the profit share? If it's not a profit share, is it just a way of quantifying the amount of rental payable? Now, when we look at joint ventures, now the important thing is a joint venture for VAT purposes is regarded as a separate person for VAT purposes. Now, being a separate person, that person must separately register and their inputs and outputs must be accounted for separately on a VAT return separate from its members. So a question like this, is this a joint venture? Can't be answered without looking at the agreement between the parties. Often we find it's not a joint venture. A joint venture is something where two parties come together, they put their efforts together and they have a joint outcome. What seems to be in this case is simply a party saying, I will pay you a rental for the property, but I won't pay you rental if we don't make profits. So I'll pay you a rental quantified with reference to the quantum of the profits we're making. And in this instance, let's say it's 20%, you've made profits of 100, then my rental will be 20. Now, on that basis, you've got two parties, they're doing independent businesses, they're not combining their activities. The one party gets out of this is the contribution of the rental facilities, and they get paid for that contribution by a method by which the consideration is quantified. So in that instance, you will have a situation where that 20% in our example is subject to VAT. And in legal terms, they talk about an agterskot. This is a classical agterskot. So there's no voorskot paying or initial amount payable. There's no amounts payable as you go along, but the value of the supply is determined towards the end of the transaction once profits are determined. And at that level, VAT then becomes payable. Could also be the other way around, where the parties agree, we contribute the combined efforts, then the combined efforts would be a taxable supply, and then a distribution out of the combined effort is a distribution to each party of a profit share. That profit share will be a supply of money and not be subject to VAT. In the present circumstance, it seems like it is simply a quantification issue and not a combined effort issue. I hope that makes sense.